Good afternoon, and welcome to the Stanbic IBTC Nigeria webinar series. My name is Abi Adishafe, and I work on the Standard Bank Institutional Sales Desk based in Johannesburg. This final session will be based on the consumer sector, and we have three esteemed panelists who play a pivotal role in the FMCG space in Nigeria. Before I introduce our speakers, I'd like to welcome Mr. Wole Adeniyi, the Chief Executive Officer of Stanbic IBTC Bank, for some opening comments.
Thank you, Abi, and good afternoon, esteemed ladies and gentlemen. I'm particularly pleased to address this gathering of investors this afternoon as we set out to dialogue on various topical issues that relate to the Nigerian consumer sector. It is important that I point out that the Nigerian consumer market is one of the fastest growing markets in Africa, both in terms of population and sophistication. The consumer goods sector so far this year has recorded a 2.16% growth. The sector has continued to enjoy various policy reforms attributed to the nation's export promotion strategy and domestic sourcing of raw materials. Though we do have some challenges, epileptic power supply, high unemployment rates are some of the headwinds that the sector continues to contend with. But this afternoon, we are honored to have a field of experts, professionals who will talk about the opportunity in the sectors, allay some of the fears, and prefer adequate next steps into the opportunities as well. So thank you, distinguished speaker, for joining us this afternoon, and business leaders generally for joining this the last segment of the webinar. Thank you and welcome everyone. I hand over back to you, Abi. Thank you.
Thank you so much. I'd like to introduce our speakers this afternoon. Our first speaker is Mr. Sandeep Prasmaranka. He's the CFO of the Africa business for Tolerance Group. He has over 20 years experience working across Africa and has been associated with Tolerance Group in Nigeria for the last 16 years, but he has done a variety of roles within the Tolerance Group, including CFO of Lekki Port and CFO of Lucky Fibers, just to name a few. Apart from Tolerance, Sandeep has also worked with reputable Indian conglomerates like Reliance Industry Limited, Voltus Limited, which is part of Tata Group. As a professional, Sandeep is also a qualified accountant. Mr. Titus Owoye is the Finance and Business Services Director of Fan Milk, Nigeria. Prior to this, he was the head of finance at Nutrimica, and he's worked in supply chain finance with PZ Cousins in a variety of capacities. He has a wealth of experience of over 19 years in FMCG and 24 years of experience in finance and audit. He is also a fellow of the Institute of Chartered Accountants in Nigeria. And lastly, Mr. Adesun Basorum. He's the CEO of Foodco Nigeria Limited, a leading omni-channel retailer in Nigeria. He's a seasoned executive with experience leading business transformation at Foodco, McKinsey, GE in Nigeria, South Africa, Kenya, and the US. In 2017, he joined Foodco Nigeria as an executive director, and he successfully repositioned the business from a supermarket chain operation to a diversified consumer goods company with interests in retail, quick service restaurants, manufacturing, and entertainment. Growing from 5 outlets, Foodco is now the largest supermarket chain in Southwest Nigeria, outside of Lagos, with 14 outlets and over 850 staff in its employment. Thank you once again, gentlemen, for joining us this afternoon. Just by way of housekeeping, I'd like to ask that if you do have a question you'd like to have asked, please type it in the chat box and it will be asked during the Q&A session. And now, Mr. Sandeep, could I hand over to you for a presentation?
Yeah, thanks, Abi. So I will share my screen and then we can start. Is it my screen visible?
Yes, thank you.
Yes, thanks, Abi, and good morning, the esteemed ladies and gentlemen. Thank you for giving the opportunity. So I will just take you a brief presentation on what Tolaram is about and how we have evolved in African space over the years and how as a group we are structured. So to start with, So first, the vision, mission and purpose of the group. So the vision of Tolaram is to create sustainable value for all our stakeholders, and mission is to being a market leader in the spheres we operate. And our purpose is to create possibilities for generation. So that's our vision, mission and purpose. Next, Tolaram is based on its guiding values, and that's that we are an organization who is defined by its values, and our culture is our values in action. We believe in these 5 core values of trust, respect, commitment, courage, and humility. These are the foundation of all our relationships and whatever we do in the group. Most of us have been adopting these values for over years. We use in not only professional space, in the personal space as well, because we feel that it makes us a better human being as well. In terms of the global reach and network, Tolaram is present in 20 countries. And we have a client touch point in 80 countries. We have a deep knowledge terrain of the West African markets, especially Nigeria and Ghana, also Ivory Coast, and we are also ramping now slowly our presence in other African markets like South Africa, Eswatini, Egypt, and Kenya. This is a brief journey of how Tolaram has evolved over years. It started in 1948 as a shop in the tailor shop, and in 1950 we started expanding into textile trading. 1970 was the benchmark when we entered into Africa, and we also branched out into other consumer goods and real estate sectors. 1980 we continued to grow in Africa, and we also ventured into manufacturing of fibers in US and UK. So our journey started as a textile player. 1990 was the landmark year when we entered into the consumer space, and we entered with a JV of Salim Group, and we started the Indomie in Nigeria. So that was our embarking in the consumer space journey. 2000s we diversified and put into digital services, energy and infrastructure, and the share also started embarking on professionalizing the group, wherein they appointed an independent CEO to run the group. 2010 is when we started building different consumer brands in the country. Till 2010, we were only having one brand, which is Indomie, but then after that, we started having multiple brands under Tolaram, and also we entered into JVs with global MNCs like Arla, Colgate, Kellogg's, and this has been a very huge successful journey for us. We also step further and professionalize the Tolaram board, wherein only the one family member is now on the board of Tolaram, and rest are all professionals. So now 2020 decade, we have further go into the backward integration, and now we are looking at the microfinance as well as developing agri value chain in Nigeria. We have also done recently a partnership with Kimberly-Clark in 2021. So this is our journey over years. What are we as businesses we do? So we are mainly into 3 business verticals. First is the consumer goods. We are the largest FMCG companies in Nigeria with brands which we will get into the next page. And our core products are noodles, pasta, palm oil, dairy, cereals, snacks, to name a few. And also in the personal and home care space, we are present. In the digital consumer services, we are not present in Nigeria. We are present mainly in Indonesia, and we are looking at Africa as an opportunity. In the infrastructure space, we are developing the Lekki deep sea port, which is the multi-purpose deep sea port, and it was the largest deep sea port in the country. And also we are developing a free zone around the port. This is our track record in the consumer space of how we have built the brands over the years. As I mentioned, we started in 1995 Indomie. Till almost 15 years, we were a single brand company, and then after that, every year we have launched a brand. And whatever brands were launched till 2015, they are either number 1 or number 2 in the categories we operate. And all the brands which were launched subsequently, they have been growing at a multiple of 2 to 3 times in the last couple of years. So, and they are on their journey to be in the top 2 or 3 positions. So we continue to dominate the instant category noodles in the Nigeria and Ghana, where we have a market share of more than 80%. And we are trying to build in the other categories like snacks, cereals, oral care, personal care. And slowly we are also embarking into the other African markets, as mentioned before, to continue to grow in the food space category. This is our distribution network in Nigeria. We are the largest distributor in Nigeria for any goods, with a retail presence of almost more than 50% of the retail universe. We have close to 5,000 distributors, and as I mentioned, we are present in almost 60% of the universe, where the 24 warehouses across the country, 12 regional offices, and also we have a fleet of 1,600 trucks, both for long haulage as well as the distribution. Tolaram's belief has been that we are always closer to the market. So we are not a trader. So whatever we sell in these countries, we have a production unit for all the products which we sell. We run 24 factories operating across Africa, and we have invested more than $500 million in this continent. We are the largest noodle manufacturer in Africa, the largest milk powder packaging plant outside Denmark for Arla. We have built the largest cereal plant for Kellogg's in Africa, and now we are building the first oral care plant for Colgate in Africa, which is under construction and will start in a couple of months' time. Sorry, one second. Yeah. So apart from this, next is the agri value chain initiative. So we as a group has immense backward integration of whatever we do. So we started as a noodle player, and subsequently we started rapid production, palm oil refinery, flour mill. And now we are further expanding into our agri initiative, where we have taken a lot of initiative to create a potential in the country. So we have embarked on palm plantation in a land size of 28,000 hectares. And we will also set up processing facilities in Edo State. Apart from palm plantation, we are also doing plantation for cassava, corn, and chili. Cassava is the first patent product for us, where we are looking at as a replacement for wheat. And this is a patented technology done first time in the world. We started the production early this year, and it has been a good success, and we will triple the capacity by end of this year. Similarly, corn localization, we have done the pilot projects, and now we will subsequently invest to increase the capacities, and the same with the chili plant we continue to do. Apart from this, we are also doing backward integration initiatives in our milk business, where we are building the Arla Farm project in Kaduna. That's done by our partner Arla Foods, and they have also done a couple of projects called Milky Way Sahel project for collection of milk, and the Damau household project for training the farmers in terms of how to maintain the cows and take a more output from them. Infrastructure business, as mentioned, we have a couple of businesses which are big one. One is the Lagos Free Zone, which is the first of its kind 100% private free zone in Nigeria. Or it is over 850 hectares of land, out of it 90 hectares is deep sea port, and we have already invested close to $1 billion in this business. Lekki Ports, it's the largest deep sea port in the country. We are almost at 90% completion now, and it will become operational by end of this year, and probably we will have the commercial operations also starting in the Q1 of 23. It's the first private deep sea port in the country. Apart from what we do businesses, we are also doing our CSR and sustainable initiatives. So in terms of sustainability, we are committed to environment. Our trust is to improve health and well-being of people. We respect the communities in which we operate. We have the courage to do right things, and as an humility which are guided to our values, we want to become a great giver. Apart from this Tolaram Foundation is the largest shareholder of the Tolagaram Group, which has 25%. So whatever we do, 25% goes to the foundation created by the group. We have certain initiatives in terms of the East Clip Center in Nigeria. So far, we have impacted close to 18,000 lives in last 10 to 12 odd years. Apart from that, we have a skills hub wherein we are training the people who are coming for the limb, as well as we are seeing that they get a job and create employment, self-employment. So that's brief about Tolaram. I hope I have not surpassed my time, Abhi.
Thank you so much. That was great. Thank you so much for going into such detail. Mr. Titus, could I ask you to present to us, please?
Okay, thank you very much. And Abby, I know when you introduced me, I am the Finance and Business Services Director for Farm Milk, Nigeria and West Africa. So I would speak not just for Nigeria, also about the footprint of Farm Milk PLC as it's spread across West Africa. So yeah, Farmic, you pardon me, there's no presentation I put up here, but I'll tell you, Farmic has been here now for some time. It's over 60 years in Nigeria, and I say over 61 years across West Africa. So, and it's a household name that everybody knows. But you would wonder how come Farmic has been able to weather through all of the challenges and or part of the topic we want to discuss today, the volatility of Nigeria over the years. I think it's such a privilege to be part of the business. Farmic is part of the global Danone business. So Danone is where the parent, the global parent of Farm Milk, Farmic PLC, and we specialize in frozen dairy here, including ice cream, flavored milk, juices, and yogurt in particular, which is our core area. But I would always describe ourselves as a frozen dairy business with footprint across 5 countries in West Africa, Nigeria, Ghana, and four Franco countries, or rather more 3 Franco countries now. Before it used to be 4, and with the parent, of course, in France. Now, Farmic, in terms of, I will talk about our footprint. Our business is structured in 2 different channels, what we describe as indoor business and outdoor business. The outdoor business is the bigger part of the business, more or less like the 65–70%, depending on which of the country, in terms of the contribution of the outdoor business. That's the one that everybody sees on the road. The boys you see on the push cart and bicycles, those are foot soldiers that engage directly with the consumers. Quite a very unique business and distribution model that we have. The indoor is the normal business that you have, modern trade, the retail outlets, and high streets businesses. So, and we have our production facilities mainly in 2 countries today, Nigeria and Ghana. In some time past, we used to be in the Franco countries as well, but now, of course, because of some of these volatilities we talk about, we consolidate and optimize the production facilities, and then we can serve the Franco countries from Ghana, and while Nigeria continue to serve the Nigeria market. Of course, you know, Nigeria has got the the bigger portion of in terms of demographics. But does that mean that Nigeria is tapping into the full potentials of what the market provides? The answer is not yet. Not yet. We're still going there. And over the years, in the last 5-6 years, the business has seen tremendous growth, growing, doubling the business, more than double the business, by responding to all the different kinds of challenges that we have in Nigeria. For myself, being in FAMIC now for 6 years. First of all, as a finance director in Nigeria, before I became the finance and business services director for FAMIC West Africa. And yes, do you want me to get straight on into the topic, or would that be enough for me to speak on the intro of the business that I represent?
That's a great introduction, and then we'll go into more detail during Q&A. I'm sure there'll be questions specific about the businesses. Thank you so much. Mr. Ade, could I ask you to please introduce Foodco?
Sure, I would be glad to. Now, could you, oh, here we go. Could you give me permission to share, please? So I can share my screen.
Yes, just remember.
Okay. Great. Abby, can you confirm that my screen is now visible, please?
Yes, that's visible. Thank you. Please continue.
All right. So my name again is Ade Stanbasharon, CEO of Foodco Nigerian Limited. I will give a bit of a perspective on, I would say, our view of the industry and of the market, so you can kind of see the world from our eyes, so to speak. Before I jump in, I'll just give a brief one-page introduction of who we are. So, like Abby had said, we're a leading omni-channel retailer with a 40-year history of serving customers in Nigeria. Our footprint is spread across 3 states, Oyo State with Ibadan there as the capital, Abeokuta in Ogun State, and then Lagos. Our business encompasses a grocery retailer, a quick service restaurant, and a commercial bakery. And we largely have this integrated across our sites in this different regions. We're an award-winning retailer, winning the Business Day Retailer of the Year for a couple of years running. Our bread brand has also won a number of awards, and we are one of the 5 largest retail chains in the country. But all right, on to thinking and talking about the consumer. So this page is an analysis from McKinsey & Company that tries to frame the opportunity, the consumer opportunity in Africa. And this particular one, as you can see, is trying to show the consumption, what it was in 2020, and then the total consumption that they project on the continent in 2025. And I think no surprise probably to many on the call, Nigeria is projected to be the largest driver of that growth, with 96 billion growth in consumption over that time period. When we drill one level down, and regrets it is a bit of a busy chart, but when you drill one level down and try to understand where is that growth coming from, within Nigeria, you see that the biggest portion of that, no surprise again, is really about food and beverage, which is where we sit. That's projected to deliver just under 30 billion in growth, consumption growth over that period. What's interesting, however, is that housing, is projected to be the second largest sector. I think there are a number of interesting things also happening within that area. But when you start thinking about things from a real consumer lens, the reality they are facing is not, excitement around what's happening in the market or belief necessarily around how large the sector is going to be, but really the reality of a very high inflationary environment, particularly once you leave the middle market and you go down to the working class or to the poor. I mean, the pressure is very, very real. This particular chart is from the National Bureau of Statistics, and it shows the year-over-year price increase from 2021 to 2022 for a number of basic food items. And you can see in the chart that for several of the products, tomatoes, yam, brown beans, prices have gone up more than 40%. White bread, which is obviously a key product for our bakery as well, is up over 35%. So from a consumer standpoint, there really is quite a bit of pressure driven by inflation in food and now more so in power. And this pressure is something that, frankly, we as corporates also feel quite a bit. We have seen margin compression in a quick service restaurant as well as in our commercial bakery over the last 3 years, not being able to pass on, the full impact of prices to the consumers. But we have actually been able to find ways to manage that within our business, and have been more fortunate to be able to avoid that compression within our retail business. So the next chart just talks a bit about how consumers think. This particular chart shows results from two of the markets we play in when we asked our consumers why they shop with us. And regrets for some of the formats in here on the chart, but I'll walk you through it. What one might have expected to see is the number one reason being price, really across the board. But no surprise, price or affordability comes in as the second most popular reason in Lagos. In Ibadan, for us, it's the lowest, and frankly, we want it to be higher, but it's really a reflection of more the overall climate around pricing and affordability. But what I really wanted the group to see from this chart is consumers, particularly middle-income consumers, which is where we play and the core of our business, are still very multifaceted. When they talk about why they shop with us, it's very much around convenience, it's very much around product quality, and it's still very much around ambience or experience, which really is a big law of modern retail. When we asked our online customers or the customers in our e-commerce and delivery business, the question of how do they decide where they shop, whether it's us or somewhere else, the first two things that they talk about is ease of shopping and fast delivery before they get to pricing. But obviously, pricing is still important. Quality products are important. Customer service is important to them, and obviously the product range is important. But they continue to be very thoughtful around how they balance these different elements when deciding where they take their dollars to. So how have we managed within this climate? So we have accelerated the growth of our business over the last 3 to 4 years. And as you can see on the left-hand side of the charts, we've been able to push our year-over-year growth north of 50% in recent years, with the exception of 2020, where COVID limited our ability to grow. What I thought would be particularly interesting for this group is what impact that has had on profitability. On the right-hand side of the chart, the graph here shows the change in gross margin from year to year. And by and large, it shows that our gross margins at a group level have stayed within 0.4% year on year over this period. So we have been able to manage our overall profitability, so to speak, while we've been driving this growth. This is not to take away from the realities of operating in a market I think everyone is well aware of the infrastructure challenges, the shortage of labor. We've already talked about some of the inflationary pressures, but we've been able to put mechanisms in place to balance the overall impact on our business. I thought it might also be helpful for people to get a sense on the mix of that growth. So this particular analysis shows the contributors to our overall revenue growth for the first quarter of last year. And this quarter is interesting because we had, coming out of 2020, we had a smaller contribution of new stores than we would in some of the other periods. And it shows that there's a small contribution for us of 6% from new products. We've got 35% of that coming from volume growth, so volume both from existing and new stores. And here there's a smaller component here at 6 percentage points from price. I think as the year went on, the impact of price increased, but at this point in time, that's what it was. So I wanted to close on this note, right? In spite of the challenges, we continue to be quite optimistic around the future of the industry. And this particular chart shows pictures from our most recent store opening, which is in a suburb of Ibadan. One of our early indicators of success is the level of consumer turnout on opening day. And this particular chart just shows a few pictures from that opening day where we had really great reception from the community and really reinforcement, right, in the strong demand that continues to exist for quality modern retail. So those would be my comments. Thank you.
Thank you so much. That was a great introduction to your business. There are a couple of questions that have come through, so I would like to just kick off here with some of the questions. But sorry, just one moment. Mr. Sandeep, if I could just ask you if you could shed some light on the Nigerian consumer's resilience. I mean, we all know that during COVID, jobs were lost, there was pressure, there was extra pressure on incomes, but we've seen the consumer companies across different categories being able to gain decent volumes in spite of having put across sharp price increases. What would you say has been the driving factor, driving demand in various sectors of the consumer space? Oh, sorry, you're muted. We can't hear you.
Sorry.
Thank you.
In our view, consumption increased during the lockdown because in-house consumptions went up as compared to the out-of-home consumption, because people were not going out, they were working from home, and also a lot of restaurants and other things were not operating or operating for a limited period of time. So that's led to an increase in the consumption during the COVID period. That drives the consumption, and of course, we as a group also have to come out with the strategies of how we can maintain the supply chain, because there were a lot of challenges because of the lockdown and all. But because of our backward integration, we were able to consistently supply the products to the market. And during this period, we believe that whoever has the availability is the key in terms of increasing the consumption. The product has to be available, then only the consumption will happen.
Thank you so much. Mr. Titus, you mentioned that you still think the Nigerian market hasn't reached its full potential. What do you think could push Nigeria further along the spectrum of reaching its full potential? What kind of opportunities are open to this market in your space?
Thank you, Abi. In the Nigerian space, everybody knows about the strength of the population, the strength of the youths, that we have. Over 70 million of the population is in the youth category. This is one category that of the demographic that has not been explored, and they are going to migrate into another set of category in another 5 years, because the evolution happens over 5 years. There are products that have not been presented to this population, and yet they are vibrant. There is also the rest of the 30 million of children who are there. There are products that have not been presented to them to meet these consumers at the very point of where they need them, because where we stand today, it's about what the consumer wants. I hear what Pat said earlier about the availability here. Now, on top of that, it is what does the consumer want at every point in time. So these two categories of the half of the 100 million that we, or half of the 200 million people we have, they have a set of needs that have not been catered for in different categories, either from the food. I know we're talking more here, this is about the FMCGs, but whether in the food category or in the household or personal care or
I just appear to be having some connectivity issues with Mr. Titus. Just whilst we wait for him to reconnect. Mr. Addy, can I just ask you, you spoke about inflation, and we all know how sticky inflation has been in Nigeria for the last couple of years, just stubbornly high, you know, within the high teens. What kind of price hikes have you seen companies implement over the last couple of years? Has it been more pronounced in certain food segments versus others, or has it been across the board?
Yeah, I would say it's been across the board, but the pace of the change and the quantum of the change we found varies quite a bit across the different segments. For products where they are completely imported by a diversified group of importers, we found those go very quickly because that channel, frankly, is not particularly thoughtful around the brand impact or their share of wallet, and they're really strictly business people, right? It's how much do I get it in for, how much does it come out for? And with the fragmented channels of trade, we've seen those grow very quickly. Literally, as soon as FX moves or pot prices change, those prices change very quickly. We have seen most of the locally manufactured categories move a lot more slowly, whether it's beverages, whether it's cereals, whether it's food items. We've found those brands to be a lot more thoughtful around their share in the market, around the customer perception, around the affordability. So in those areas, the price increases have been a lot slower and frankly lagging the growth in inflationary costs. From our point as a producer within a restaurant and a bakery, we see that as well, right? We are not able to move all of the input prices impacts to the consumer immediately. And frankly, in some scenarios, not able to move it all, because we also need to be very thoughtful around brand perception, acceptance in the market space. So that also slows down our ability to pass on that inflationary increase to the consumer.
Thank you so much. Excuse me. Mr. Sandeep, can we just ask, how are you winning the battle against counterfeit products or cheaper items that are being smuggled through some of the porous borders? Like, how are you pushing back against against these smuggled items that are trying to, creep into your space?
So those items we can't do. We have our strategies very clear about affordability, availability, and acceptability of our project. So these are the 3 A's which we follow in our strategy in the consumer good, and we have been following this for a year. Once we follow these 3, there will be a bit of distractions, but our brand, our quality has been strong enough. So our consumer loves our products, and that's what drives us.
Good to hear. Thank you so much. Mr. Ade, just there's also a question also to you. I mean, some of the results coming out of publicly listed consumer companies have been quite buoyant in spite of the inflationary pressures. What do you attribute this to?
I would say, and again, I would always caveat my comments to say my viewpoint is very middle income focused and then mass market focused. But very much like Sandeep had said, in the last 2 years, we have been, frankly, in a space where we've been more supply constrained than demand constrained. Our supply chain leaders have struggled to get availability in many of our product lines past the mid-80s. Because frankly, manufacturers just are not able to keep enough products within the value chain. And frankly, even importers are struggling to keep enough products available for the full range of demand that's out there. So the sense I have really is a couple of fold. One, as we all know, right, in spite of the economic situation, the underlying demographic fundamentals in our country are still strong, right? Households are growing, kids are being born, people are marrying, creating new households. So there's generally a strong demographic push that's increasing consumption. Certainly with the economic times, there's been some trading down. So folks, for example, if we talk about some of the tolerance products, switching from imported Kellogg's to local Kellogg's, just based on what they're able to afford at that point in time. But their children are still going to eat cereal for breakfast before they go to school, right? That fundamentally is not going to change. So one, I think, is the overall growth in that household demographic that continues to serve almost as an underpin that enables this to grow. And frankly, until we can get some normalization within the supply chain, I think we're going to continue in this period for a while where demand in many categories still is going to outstrip supply.
Thank you so much. Mr. Titus, we lost you there. I don't know if you'd like to just recap on the answer you were giving, before we lost you.
Yes, interestingly, I began to talk about technology and then I got knocked off on technology. Yes, so my first point was around the strength of the demography and which is going to evolve in the next 5 years. For example, the youth category, the kids category, and even the existing, I'll call it the existing, the 100 million of the rest of the people who are above the youth. Okay. The other bit is on the technology, which today Nigeria is becoming the hub, not just in West Africa, for the evolution in technology in social media and a number of tools. You'll be shocked at the size. There are quite a number of data on the net about how much creatives that come from Nigerians within the not just in the social media space now, but in terms of the creativity in the technology space for tools that can be deployed to support as enablers for growth in reaching out to consumers in whatever variation they come, because they are changing and they are evolving very, very fast. So I'll put these two together. Let's forget about the insecurity and all these things that you have there. You focus on the consumers and their demographic structures and the enablers that come with the technology. It's enormous. If I put a third one on top of that, is the amount of infrastructure deficit that is available today, but which, in my opinion, is actually a huge opportunity for economic growth. I think I heard Ade talking about the supply chain. You will see a number of things that have been happening within the supply chain industry. I will call it the supply chain industry in Nigeria. In my business, for example, it's cold chain business, and not many of us in this. When I say cold chain business, it is cold chain start to finish, the end of the consumer, to maintain a high quality standard of the products like the consumer enjoy. Now, how many people have been able to invest in this area? Fine, it's a good thing for us, but it is also meant the size of opportunity that is available there. for not just farming now, but for a number of all the value chain process that we have. Yeah. So I put it in those three: is focusing on the consumer's needs, leveraging the technology that is bolstering now, and then turning the infrastructure deficit into the big opportunities that's available there.
Thank you very much, Mr. Titus. Mr. Sandeep, we all know that Indomie is the most popular brand of noodle in Nigeria, but how are you dealing with the much more competitive environment in the noodles and pasta space compared to a decade ago?
So I would say that we believe that noodle market is, we are barely scratching the surface. There is a huge potential for the noodle market to go if we compare to other countries like Indonesia and all, where still the PCC is 5 times of what is in Nigeria. So there is enough space to grow. It's about, again, constantly innovating the product, making it available, and we do also do a lot of sampling activities wherein the consumers are being tested, where we invest really in the category to grow. We have been in this category investing for last 25 years, and we still believe we will continue to do so to expand the market and create the market, especially for noodles, where we have a bigger pie. Pasta has been, we look at is, it's not really a consumer product. Now it's more of a commodity. So if you can do it, certain innovations will probably spark the category, but we don't see that it has grown as good as noodles in the last 10 years. Well, we are certainly not the leaders. We see that the leaders are the one who create and drive the category. Pasta, we may not be the leaders in the category, but noodles, definitely we are. And there, we drive a lot of from the category of how to drive it.
Thank you very much. Mr. Ade, you were kind enough to talk us through, the margins that your business has experienced over the last couple of years. Could we just ask, what kind of strategies have you had to put in place to protect your margins in light of the operating environment that you are working in?
Sure. I think a few different things we've had to do over this period. First one is around product innovation. So being thoughtful around how we are driving new product introduction, both for things we produce, as well as adding new products within our retail space. The second thing that we're quite deliberate around is sourcing and working with the right partners to ensure that we're maximizing the opportunities to bring down input prices. We're maximizing the trade-off between volume and price, credit and lack of credit and price, and really pulling all of those levers from a sourcing standpoint that can help. The third thing we're quite thoughtful around is just our overall pricing strategy. Being a retailer, we sell thousands of products, and frankly, the margins vary dramatically depending on what product you're talking about. So being sufficiently sophisticated, right, in how one does pricing in retail is quite critical. So that's an area where we've made some improvement, and we're also going to continue to drive kind of further improvement. So those are the things we've done kind of at the gross margin level. I think at an operating profit level, we've always been quite a frugal company. So it's really helpful that that's been in our DNA from the start. So we continue to be very deliberate around watching our spend in store, our spend at the headquarters level. And now as we've continued to scale, we're having to also redesign processes to really figure out the right balance between autonomy and speed and cost effectiveness within our key spend areas, whether it's utilities, whether it's repair and materials, whether it's consumables. It's really been deliberate around just getting the management system right for each of those to keep it at the right cost level.
Thank you very much. Mr. Titus, are you planning to explore the options of mobile money payments for your B2C segment, or do you think the market is still not ready for this kind of development just yet?
Interesting questions. If I tell you we were one of, if not the first, we explored this when CBN came up sometimes in 2013, 2014. The cashless thing, and we began on the mobile money solutions, partnered with a number of some of the pioneers of the mobile money that we have in Nigeria today. We partner with them to ensure that we, not just that we comply, but also to enjoy the benefits that comes with the mobile money. And I think it's been tremendous. There are so many advantages that you get from that. So for like about 8 years now, we've explored and we've consistently utilized the mobile money tools and partners that are available in Nigeria. And I think we have contributed towards the development of that in that space, as in family. So apart from leveraging on the one that comes with the telecoms organizations, yeah, but we've been exploring this for a long time and have seen the benefits here in terms of ease of doing business, even for our customers, as well as our vendors across our value chain process. The benefit of the controls that come with it is enormous, because you don't have cash handling in the value chain process. And on top of this is we have also engaged our customers across the value chain to adopt this the mobile money tools and enablers. So for me, it's when CBN began to push for these and even include the e-Naira, I said, we've been here and we're there, and we are contributing to improving on that structure.
Thank you very much.
Let me just say,
please, yes.
So sometimes I've seen a number of companies, when I speak to my peers and so on, who seem to have very, people have fears and doubt about the process, or will our money disappear in between. I think you can't lose if you put the right controls in place. Yeah, I think that's the right word.
Thank you so much. This next question, just given the topical nature of FX illiquidity in Nigeria, I'm going to ask all three of you, but in different ways. But I would like to ask, what have been your experiences with securing FX for your business needs? And where possible, do you have a hedging strategy in place? And I'd like to start with Mr. Sandeep, please.
So FX has been a challenge throughout the last couple of years, and we have been trying to navigate it through whatever is available. I think the central bank of government has been trying to support whatever way it can in terms of providing us. The rest we have to manage through the different sources, but our strategy is very clear that we are not keeping an overdue obligations in our businesses, and anything above 6 months, our overdue, we have been trying to liquidate so that we don't carry a lot of burden in our balance sheets. But it has been a very tough situation. There is no right or wrong or no strategy. FX strategy is essentially not available. Unfortunately, the NDFs doesn't work because there is no certainty of delivery of dollars. So you have to manage the situation, which is different windows which are available, and find the most optimized window to see that you don't carry a lot of overdue FX burdens in your balance sheet.
Thank you for that. Mr. Ade, you mentioned just again that the breadth of items that you carry in your store. what percentage are imported, and how difficult has it been for for your business to secure FX for these imported items?
Yeah. Our assortment, depending on what category you're in, is anywhere from, I would say, 30 to 65% imported, depending on if you're in a food category or if you're in a general merchandise category. I think we have designed our business so we work with a number of authorized brand representatives locally, so it reduces the amount of direct importation we have to do ourselves. So that has helped us, I think, reduce the direct burden of the current FX situation. But even for that, we have to do ourselves, right? I mean, I don't know that there's much I can really add to what Sandeep has already said. It's just not there. So getting the quantities you need at the time you need it, at pricing that's reasonable, just hasn't happened, and hasn't happened smoothly for a while now. So for us, what that has meant in our business is things are getting in later than we would want, right? We're not getting some of our importation done as quickly as we'd want. We're not necessarily getting it done as cost effectively as we'd like, but we have, frankly, just continued to move forward and make the best we can of the situation.
Thank you very much. And Mr. Titus, same question to you, please. What has been your experience in sourcing FX, and for your business, what is the largest demand? What part of your business, or what, I suppose, is the largest FX demand for your business?
Thank you. Because you in the bank, you know how it's been such a difficult thing to have. Sometimes the questions you ask yourself if you meet some of our colleagues is, have you got FX? This is what we ask ourselves. But for farm milk, we go through this same challenge, and for me, it's always I'll pick the words of Sandeep: is reduce as much as possible any foreign currency in your books, because of the constant devaluation. Today it's about 50%, right? That is if you do peer-to-peer, not the interbank. Yeah, even at the interbank, compared to what we closed last year, we're talking about 25-30% devaluation. And sometimes if you don't respond very quickly to any opportunities you have, you bite your fingers and say, I think I just lost. So first thing first is don't keep much in your books. Next one is what we call in here a natural hedging. So over time, the last 3 years, we have evolved our ratio of our import export to, that is raw and pack materials, and including spare parts. A 30-70, we switch it to 65-45 by going through get some of the materials or input materials from local suppliers. Now, it also meant that we need to innovate as much as possible. Some of the key materials input that we can get from the Nigerian market, yeah, we have to get it. I guess this is one of the thrust of the CBN's push in a number of the policies that they turn out every now and then. It's good. The question is, does this still have indirect impact on your input cost, right, into your margins and your profitability? So it's speed in sourcing for the FX from whatever of the market that's available in the banks, and then innovating to have input materials, just some natural hedging. We've introduced some very key materials that we could source in Nigeria here into some of our products now. It's been very good in terms of the quality, even improved quality. So these two strategies have helped, but there's still a long way to go. You still can't get effect. If you have some, please let us know.
We'll do our best. Thank you so much. But Mr. Titus, still with you. Just you mentioned, your business split is, but 30-70%, I believe it was, between the indoor and the outdoor business. During the the height of the lockdown in Lagos, for example, and even in Ghana and other parts of West Africa, how did your business have to pivot? Did you see a substantial growth in the indoor business, given that the product sizes are bigger and therefore costlier? How did your business kind of manage to cope during the height of the lockdowns?
Thank you. And absolutely, there was a change in the ratio at the lockdown. So again, like my first point about the opportunities in technology, we began to leverage reaching the consumers, leveraging on technology, and it is interest you to know that now consumers can order for even a sachet of farm vanilla online, and then you can buy. Unlike before, you have to wait for our vendors for paying for you on the road before they pick. Now, and some of the products that we used to describe as, some of the categories that we used to describe as outdoor categories, now began to have placement in the indoor, in the high streets and neighborhood kiosk shops and so on. So we, not just in Nigeria, this is across West Africa. So we had to leverage technology to reach the consumers. So that ratio shifted slightly in the lockdown, I think, to like 35 indoor. But that was also placing some of the outdoor category in the indoor channels to be able to reach the consumers. But we in the lockdown, so leveraging, of course, on man and all of the those of us that are non-essential categories. So we were still able to move around, even though it was quite difficult. Yeah, but the ratio shifted, moved and improved for us. So it's good, and we continue to build on that.
Thank you very much. Thank you very much. Mr. Screen just froze. Apologies, gentlemen. Mr. Sandeep, I'd like to ask, have you seen any kind of downtrading in some of your snack segments, for example, downtrading into smaller SKUs or into cheaper products? Has that been a trend that you've seen in your business?
We didn't sell it in 2021, but now with the continuous wars and the price escalation, now we are seeing that the categories are a bit getting stagnant because, well, let's accept that the minimum wages has not revised. The inflation, food inflation is above 30% for last 2 years. So the consumer buying power is gradually evading, and our products are mostly the mass products, which is consumed by the general public. So that probably we see that needs to change. Otherwise, the disposable income with the people has to move in line with the inflation. Otherwise, the consumptions will go down. That doesn't change this.
Thank you. Mr. Ade, the speed of your business has been very impressive. Do you have current plans, or are there any plans on the cards to implement any kind of loyalty scheme to keep customers coming back in and to push back against other competitors who might be trying to make moves on price, for example? Yeah. Is loyalty programs even in your segment of the retail space? Are loyalty programs even taking off in Nigeria right now?
I think it's a fabulous question because personally, I think there's a bunch of opportunity in loyalty. Actually, we were just talking about this at a board meeting last quarter. Within the sector, there are a number of loyalty programs, but I don't think there's really any that I would say are sexy or are really driving a material shift in consumer behavior. Obviously, on the margins, some programs might drive some some improvement in behavior, but I don't think any of the players in retail, whether it's grocery, healthcare, whatever segment, can really say there's a loyalty program that's a big driver of their strategy. As a business, we continue to look at what the opportunity for loyalty is. We do have a current program in place that has some modest impact on our business, but not a transformative impact. But we continue to look at the space, and within the coming years, we likely will make some changes. But at this point, there isn't more detail I can share.
Thank you so much. Mr. Titus, much like Indomie, your products are also household names. People, when they talk about, frozen yogurt, they tend to say fan milk, fan yogurt. How have you been able to protect your market share, and who is your largest competitor in the Nigerian market?
I'll take the second one. The competitor, we are almost alone, but we compete with complementary. It's the complements that we compete with. So it's frozen dairy. There's so not many of us in that category that is of the size of what we operate. But our competition is more in the other products that fight for the share of pockets based on disposable income. Our products are on the go, like I mentioned before, but it's not just on the go. There are products that are the magical price points. 50, 100, 150, 100, 200, and up like that. Apart from the ice creams, which is more in the indoor market or in the key accounts. Now, protecting our share is, again, one of it is to make sure that we are consistently available in the space there. We have a well-structured value chain and distribution channel, which we have over 17,000 vendors across the nation. I mean, vendors, when we call vendors, are the boys you see on the road, and also the girls, because we have some things for ladies as well. Now, we make the product available to them constantly, consistently, as much as possible, and also ensure that we fight to protect the margins such that they are not, we would not increase our consumer prices often, but for how long? So there is an extent to which you can make a lot of productivity in-house, improve and consistently improve, but at some point you need to pass some across to consumers. To interest you, when we let me see, when there was the VAT increase, for example, we didn't pass it across to the consumer. We had to absorb it in the outdoor market. A little bit on the indoor, yes, we did some, because it's more of ice cream indulgence and so on. Yeah, but we try as much as possible to defend let me use the finance word, defend the bottom line. So don't price up. But second, the third point is around the value proposition, which is a call out of feedback from the consumers. So we look through the set of the value proposition and then what we put across to the consumers in terms of the sizes, because there are so many of these techniques that is being applied here and there in sizes, in reformulation. More or less, I think it's Ade that mentioned innovation, and I will add innovation and re-innovation consistently. We in 2019 we introduced the Go Slow Premium, which is our premium ice cream range into Nigeria. We knew the premium ice cream range is heavily dependent on imports, but we know we have the expertise to make premium ice cream in Nigeria. This is more than 60 years of manufacturing of frozen dairy in Nigeria, and then with our parents also who are masters of not just the frozen dairy, now yogurt and ice cream globally, and waters and baby food. We introduced Go Slow, and in the first 12 months, Go Slow took 35% market share of the premium ice cream range. So you have to consistently innovate, re-innovate, and excite the consumers with different flavors. We keep bringing different flavors. So, and but what that meant is also, I don't know whether it's coming in part of your questions later, it's also meant that you have to keep investing, not just behind the brand now, but in your manufacturing facilities.
Thank you so much. Just in light of time, actually, that was the last question I was going to ask. So thank you so much for such a comprehensive answer, Mr. Titus. Gentlemen, I'd like to thank you so much for your time this afternoon on this panel. Your answers have been highly informative, and I'm sure that our our esteemed guests as well would also like to thank you for your time this afternoon. But just before I wrap up, I'd like to hand over to my colleague, Bumi Olarinoye, who is the CEO of the Stanbic IBTC Stockbroker Limited in Nigeria. Closing remarks.
Thank you very much, Abby. On behalf of the management of Stanbic IBTC, I would like to say a special thank you once again to all our speakers and our investors who have taken time to join us over the past 2 days. We kicked off the 2022 webinar series for this year yesterday with a macro session featuring the IMF Nigeria resident representative, Mr. Ari. We then had the technology session with the CEO of Liquid Intelligent Technologies Nigeria, Mr. Wole Abu, and the Chief Executive Officer, Yellow Digital Financial Services, MTN Nigeria, Mr. Usoro. We had the political session earlier today with the founder and CEO, Center for Values in Leadership, CVL, Professor Pat Otomi, and the head Division of Security and Strategic Studies for the Nigeria Institute of International Affairs, NIIA, Dr. Joshua Bolariwa. We have now concluded the webinar with the consumer session. All the sessions have been engaging, rich, and enlightening. The speakers brought unique insights and perspective to each topic discussed. The recordings of all the sessions will be made available to everyone who registered for the event. Thank you very much, Mr. Sandeep, Mr. Titus, and Mr. Adi for your participation today. And thank you, everyone on call, for your participation, and enjoy the rest of your day. Thank you so much.
Thank you.
Thank you very much. Bye.
And thank you, fellow speakers. Good to meet you.
Thank you.
Have a great day.
Bye. You too.
Thank you. Have a good evening, all.
Good evening. Bye.
Thank you. Have a good evening. Thank you.